Welcome to the first webinar of the Financial History Network. We're just going to wait like 3 minutes before starting Professor Dan's presentation. The network promotes a scholarship in the fields of financial history and the history of finance, broadly defined. It was organized earlier this year, I would say on occasion of a pandemic, but also in spite of the pandemic, as a forum for the presentation of works in those two disciplines and adjacent disciplines dealing with the organizational, market, and institutional long-term development of financial intermediaries, markets, practices, and participants. My colleagues, Bernardo Batis, Sergio Castellanos, and Paula Bedovelli, and I, Manuel Bautista, we thank you all for your enthusiastic participation and your endorsement of the network and its webinar series. We launched a call for papers. We received about 35 papers, and we came up with this program, of which Professor Dan Du's paper is the first. So let me just, we can wait for 1 minute, I guess. But in the meantime, I'm also going to present Professor Du. Dr. Du is an assistant professor of history at the University of North Carolina at Charlotte. She is currently working on her first book project titled This World in a Teacup, Chinese-American Tea Trade in the 19th Century. Growing out of the research on the tea trade, her other projects examine tea consumption in the post-revolutionary United States and the credit instruments employed in pre-modern Asian trade. So the dynamics of this webinar are going to be like this. Professor Du will present for about 30 minutes. And then we will open the floor to discussion. We will collect 3 questions from the audience. We will let Professor Du answer those questions, and then we'll collect the next round of three questions. We kindly request that everyone keep their phones on mute, and that you raise your hands or use the chat in case you want to ask a question from Professor Du. So without further ado, I think it's time to let Professor Du begin with the presentation of her paper. Thank you.
Thanks, Manu, for the introduction, and thanks to the committee for organizing everything. So now I'm trying to share my PowerPoints with everyone. So is it good?
Yes.
Oh, okay, thank you. Today I'm going to present part of my ongoing research on the Chinese-American tea trade. I will emphasize the credit instruments used in the trade. So I was very excited actually to see this platform dedicated specifically to financial history. And I'm very grateful that many of you are here. So I really look forward to your comments and suggestions to improve my arguments. So this talk actually comes from 2 sections of my current book project on the Chinese-American tea trade in the 19th century. And I think maybe the Chinese-British tea trade is a better known story, especially how the British East India Company poured out its silver to buy tea from China, and also to counter the trade imbalance with China, the company, and especially its licensed country merchants started to smuggle opium from India to China. Well, this eventually triggered the Opium War. So this has been a well-known story. Well, when I started my research on the Chinese-American tea trade, I also asked myself a question, how did Americans purchase tea from China? Because Americans, the United States actually was the 2nd largest tea importer from China. So did they face the same or similar frustrations as their English cousins? So this is the question that drives my research. In the research process, I found that I found not only the importance of silver, but also some actually many credit instruments in the trade. Well, by examining these credit instruments, it will enhance our understanding of the credit system of China and Americans' role in triggering the Opium War and China's connection with the world. So now let's look at them one by one. So first, we may start with silver. So why silver? Why is silver so important to China's trade with the world? That's because silver was the primary currency in China back to that time from the 16th century. But from this chart, from this table, we can see China was not a major producer of silver. So China actually imported lots of silver from the world. We can see from this chart, at the beginning, China actually imported silver from Japan. And then when Europeans came to Asia, like Spain, like Great Britain, they started to ship silver to China. Well, from the 16th century on, China became the center of global silver flow. This is the major argument of Andrew Frank's famous book, Reorient. So in the 19th century, from this chart, we can see actually the United States replaced the other European powers, and became the major supplier of South American silver to China. Well, because of the large volume of silver imported into China, many scholars portrayed China's economy and China's foreign trade as a cumbersome hard money system. Well, actually, this idea actually started as early as the 19th century, like this one, this American politician said, well, the China trade was guided by a very simple and elementary principle, that is all ready money or hard money, no credit system, no paper money. However, in my research, I found this was not very possible, or this system was very inefficient, because if everything was paid with the silver, it was very hard for American merchants to do that, even though the United States was the major supplier of silver to China. Because in the 19th century, especially in the early 19th century, American merchants' correspondence were filled with the anxiety over procuring silver. Sometimes they even had to pay gold to buy silver. So this would be a very inefficient system if everything was paid by silver. And also in addition to that, they also need to pay like insurance, commission fees, and lots of other fees to ship silver to China. But luckily, actually, to American merchants, the de facto transactions in the tea trade was not so cumbersome, was not so hard to deal with because of the credit system. So first, credit system like a book transactions, book sale existed in the China trade. I can give you one example. This is an account book from an American merchant named Henry Hollingsworth. So he recorded his transactions in his account book. On the other page, he recorded the cash he received, and on the other page, he recorded all the payments he made. So I compiled all of his transactions with the Chinese merchants in this table. Well, you can see the highlighted parts are actually credit payments on the book. So from this, we can see actually the total amount of the transaction was the total amount of the transaction was about $167,000, while about $114,000 was paid on book or recorded on book, and later they shipped silver to China to settle their book balance. So about 68% of the total transaction was credit payments. Moreover, many large transactions were not paid by the real money, the hard money, silver. Moreover, from this entry here, we can see a note or a credit instrument also existed in the trade to facilitate the transactions. If the merchants couldn't use their book balance or real money to settle their transactions, they may use this credit instrument, promissory notes, to settle their transactions. Well, a promissory note is a type of credit instruments. In the West, in the European context, credit instruments included promissory notes, bills of exchange, and checks. Well, actually, this category exists in the Anglo-American legal system, while in the continental European system, check was not considered as a type of credit instruments. But I don't want to waste your time on the nuances here. So I just want to say bills of exchange and promissory notes were the two major credit instruments used in the international trade. So even though the term, maybe you can go back to it a little bit, the term credit instruments appeared in English vocabulary in the late 19th century, and the standardization of the two legal systems of credit instruments started at the turn of the 20th century. But credit instruments had been in use in Asia, in many other ancient trading systems for centuries. So it's not surprising to see a promissory note in the China trade. Well, American merchants' letters mentioned consiglias notes a lot, extensively. And finally, several years ago, I was able to find this physical note from the Historical Society of Pennsylvania. From it, we can see how promissory note worked in international trade. So here, William Shaler and Richard Cleveland promised to pay the Chinese merchant consigua a certain amount of money. Well, if they couldn't pay it during a certain time, after the expiration date of this note, they would pay an interest at 1% per month. So from this, we can see a promissory note is like a formal form of IOU. It's a written promise for someone, for the debtors, to pay the creditors in the future. Well, so these notes were used a lot in the China trade. Moreover, the promissory notes were negotiable instruments, which means they could be transferred to third parties until they were cashed. So in the process, these pieces of paper actually can be used as a type of currency because they assumed some function of money. Well, because of the negotiability of these promissory notes, American merchants also use the Chinese merchants' promissory notes as a means of payment or remittance, sometimes as good as cash or even in preference $2 to cash, because now with this piece of paper, they had more time to raise funds. Okay, so how large is this credit economy created by promissory notes? We had some data about it. Well, this table was compiled by Frederick Grant, but it's only an incomplete table to show how many of consigua notes were in circulation in the United States. From this, we can see about $630,000 actually was in circulation. If we convert it into present day value, it's about $17.6 billion in 2019 in terms of the share of GDP. So we can imagine how large the volume of this credit economy. Well, consigua was not the only Chinese merchant who used the promissory notes in their tea trade, because during Thomas Jefferson's embargo from 1807 to 1809 and the War of 1812, many American merchants couldn't ship silver specie to China to settle their debt. So they just delayed that, or some merchants just defaulted on their debt. So Chinese merchants started to sue their American debtors in American courts. Well, they left lots of records about their debt relationship and promissory notes. So from this, we can see consigua was not the only one. Many other Chinese merchants were also using this credit system, and some of them were using promissory notes, especially Haogua. So this just showed us the first type of credit instruments used in the China trade. Well, also during this period, because some merchants couldn't ship silver to China, they started to use another type of credit instrument, bills of exchange, to repay their debt to consigua and to their Chinese creditors. Well, for this document just shows us Philadelphia merchant Robert Warren used 3 bills of exchange drawn upon English merchants to pay consigua's notes. Well, so this is another type of credit instruments. It looks like this. Well, I don't want to waste your time on how this bill worked. If you are not familiar with it, but this is a better known credit instrument than promissory note, maybe in the China trade. If you are unfamiliar with it, you may just imagine it as a check used in the international trade. So this check was started to be used during the War of 1812. However, from this chart, we can see American merchants stopped using it for a decade. They started to use it considerably, extensively after the late 1820s. So some American historians like Jake Stans asked this question: why did American merchants stop using this means of payment and remittance, since it's cheaper and more convenient than silver? Well, the reason may lie in the nature of credit instruments as a type of negotiable instruments. Again, negotiability was the key here, because if you want to negotiate your instrument, if you want to transfer it to a third party, you need their confidence in your reputation, in your credibility. However, this was lacking for American merchants in the first several decades. For example, even in the 1830s, some famous American merchants like Perkins and Sturgis, this company like J.P. Cushing, all of these were prominent merchants or merchant firms in Boston, but they were little known in Bombay, in India. So they were not able to sell their bills in India. In the end, they need to obtain the endorsement from Haoguan, a very famous Chinese merchant, because Haoguan was well known throughout India, while his endorsement made their bills valuable, saleable, and transferable. So this was the reason at the beginning many American merchants didn't choose this means of payment, because they needed to prepare cash to pay their notes, just because their notes couldn't be handed over several times. But in the late 1820s, something happened in China which gave them a chance to negotiate more bills for their trade. This was the opium smuggling. We know maybe from the late 18th century, the British merchants started smuggling opium from India to China, but the trade really thrived until the late 20th century. From this chart, we can see from the 1826, the opium smuggling between China and India thrived. Well, this actually produced lots of opportunities for the bill market. Because from this we can see when India and the British merchants smuggled opium to China, they can make a lot more money than before. Well, in order to ship their proceeds in China back to India and Britain, they need more bills of exchange. First, because usually the British East India Company required them to deposit their silver proceeds with them, and then they use the bills of exchange from the company to ship their proceeds, to remit their proceeds back home. And second, the bills of exchange were much cheaper and more convenient to use. So actually, this produced a very large bill market in China as well. So American merchants started during this period to sell more and more bills in China, in India, and even in Southeast Asia, because first, American merchants could get lots of bills now, primarily generated in their transatlantic cotton trade. From this chart, we can see from the 1820s, 1820s, America became the major supplier of raw cotton to Great Britain. So now they had lots of bills on England, and then they could just use the bills of on England in the China trade. And it's like, and that's why in the 1850s, this American merchant Gideon Nye recalled the China trade, their tea trade with China. Well, he said that the major medium of purchasing tea from China are bills of exchange and cotton products. Well, the rate of exchange, bills of exchange in China depended on the opium trade, while the cost of cotton products depended on American raw cotton. Well, I have this information in my paper about the cotton products used exported to China by American merchants, but I don't think I have enough time to elaborate on it now. And so now let's just still focus on bills of exchange. So first, American merchants could get bills from England to pay or to as a means of remittance or payment in China. And the second, the United States. The Bank of the United States also took advantage of this bill market. So they created a 180-day bill of exchange specifically for the Asian trade in 1812. They started to do this in 1812 because this type of bill were not negotiable except to the eastward of the Cape of Good Hope. So this type of bill was used only for the Asian trade or China trade. Because of that and many other factors actually, and like the economic crisis in India, after that, from the late 1820s, Americans started to ship more and more bills to China, while their shipments of silver to China declined sharply. So what's the consequence of this? Actually, two consequences. First, it partially led to the Panic of 1837 in the United States, and in China, it partially led to the Opium War. We can look at them one by one. So we know the Panic of 1837 is a very popular topic in American history. So many American historians attributed this financial crisis to actually President Jackson's bank war against the Bank of the United States. However, in the 1960s, this economic historian Peter Taman found that actually there was a factor that beyond the control of President Jackson, that was the use of bills exchange in the China trade. Because before this period, Americans shipped lots of silver to China, but after they started to use bills of exchange generated in the Atlantic trade, they stocked their silver in the United States. This actually inflated American economy and eventually led to the Panic of 1837. The Panic of 1837, like modern day financial crisis, caused many failures not only in the United States, but also in England and eventually in China. From this table, we can see actually during and after during the Panic of 1837, two large Chinese merchant firms failed, and which created the largest amount of foreign debt in Chinese merchants' bankruptcies. Well, this was one consequence in the United States, the Panic of 1837, because of silver stock inflated of silver out of China during this time period. So we can see the giant gap here between the import and the export of silver. So actually this just increased the silver drain in China. So Chinese actually lost more and more silver in the 1830s, and they started to feel the consequence, the effect of this actually from the 1836, because in 1839, some Chinese officials reported to the emperor that some Chinese merchants from 1836, some Chinese merchants started to owe silver to the government. In 1837, they already owed about It's 1 million taels of silver to the government. Well, put it simply, you may just consider it, think it as a type of tax. So these Chinese merchants couldn't pay taxes to the government. Well, the government maybe attributed the reason they silver due to the opium smuggling. So from 1836, the emperor held many conferences with the officials to discuss whether to legalize opium or to prohibit. While the group of people who wanted to prohibit opium became the mainstream. So they started to tighten their policy. They started their crackdown on opium. And eventually in 1839, the Opium War started. So from this, a very brief introduction to my arguments, I want to show, well, China's foreign trade is not a hard money system. It's more complicated because a credit system existed in the China trade, and American merchants' participation in the credit system helped to trigger the Opium War. Well, actually, the outbreak of the Opium War may not be a consequence of China's isolation from the world, but instead shows China's interconnection with the world financial markets. So that's everything that I need to cover in this talk, I think. And I look forward to your comments and suggestions. Thank you.
Very good. Thank you very much, Dan, for your presentation. And I wonder if anyone has questions. We can open the room for discussion of the presentation and the paper. Yes, Rafael Pardo first, Lester, Sue, and then the person in the chat, Shweta. So in that order, please. Rafael?
Yes, sorry about that. Can you all hear me?
Yes.
Okay, thank you. And apologies for not having the camera on. My camera is just not working well today. So I very much appreciated the paper. And, you know, one thing that, a question I had regarding the use of especially the promissory notes, from time to time in the paper, you would discuss how negotiable instruments were, they could be negotiated with or without endorsement. But you know, the law would distinguish between instruments that were payable to a bearer or payable to an identified person. And if they were payable to bearer, negotiation did not require endorsement. Whereas if they were payable to an identified person, then it required endorsement by the identified person. So, you know, one thing that I wonder whether you've come across in your research is, you know, how often these instruments were endorsed before they finally made their way to the merchant, to the Chinese merchants. And if you can identify the closeness of the relationship between the last endorser and the merchant, insofar as, because of course, if an instrument were dishonored and not paid by the person who made the promise to pay, then the holder of the instrument could always go after the endorser based on the endorser's liability. Right. And so I'm just curious as to if there's anything about the identity of the endorsers that may be further facilitated the acceptance of these instruments as payment, and that somehow changed the dynamic based on what you're studying.
Yeah, that's a great question. Thank you.
So we will follow up with Alistair, Sue.
Hi, yeah, a wonderful presentation. I learned a lot. So thank you so much for sharing your paper. I just had a question about silver exports to China in the 1820s. If I remember looking at the graph, your graph, after the War of 1812, there seemed to be a surge of silver to China. Yeah, we can just look at the, yeah, there we go. So yeah, from 1815, which is basically the end of the war, to 1827, there's a lot of species going into China from the U.S. So is this just a case of the U.S.-China trade expanding, or were promissory notes less? Were they just used to a lesser extent at this time? So what explains, I guess, the surge in silver? Thank you.
Okay, thank you.
Thank you, Alistair. Question from Shrita, and then we will let Dan answer these questions until we start the next round. Thank you. We can't hear you, sorry, Shrita.
Can you hear me now?
Yes.
Yeah, hi. Thank you, Professor Du, for a very, very informative presentation. I'm actually doing my doctorate on banking networks and instruments like the hundi in colonial India. And I was wondering two things. One, how would you sort of differentiate between promissory note and bills of exchange? I know that there's lots of overlaps, but how would you differentiate it? And the other thing is, so what were the sort of forms of paper instruments that, the non-colonial forms that were operating, that were issued by Chinese traders and bankers and merchants? And how did colonial law or colonial regulations try to kind of delegitimize them?
That's a good question as well. Thank you. So should I now respond to all of their questions?
Yes, please. Thank you.
Okay, thank you. Thanks to all of you. Actually, these are great questions. So if I cannot cover all of your questions, just let me know. I will try to I will put some of your questions together, actually, maybe to answer some of your questions. First about how about I combine the first question and the third question to talk about credit instruments and their function, not in the China trade and also maybe in pre-colonial period Asia. First, thank you for talking about how the credit instruments functioned in the actually in international trade. So my answer to your question is actually I don't know much detail about how many times they were transferred, how many times they were endorsed, and when someone defaulted on their debt or didn't pay their note, what's the consequence? Simply, I just didn't know because I didn't find any evidence about that in the materials, in the documents. I really want to know. But first, the records about the Chinese promissory notes are only in American merchants' correspondence. The physical note, contiguous note is the only physical note that I found in these documents. So I didn't know for sure in the process how it functioned. And second, because Chinese merchants documents, I guess some of you know this, were lost a lot. So we couldn't know that. And the third, because both of them, both parties didn't clarify the transaction process in their documents. So actually, I will look for more information in the future. Actually, that's my next project after I finish the research on tea. I want to do some research on how Chinese or Asian credit instruments used in the early trade with Europeans before Europeans dominated the trade. So, and I hope I will find more details to answer your question about that. So first, I'm sure this is not a good answer to your question, but that's just what I get now. And second, about how it functioned, I just want to ask you, I'm still answering the first question from Raphael, if my pronunciation is correct. So you talked about how it functioned, but I think that's, to me, it's like a it's like how it functioned in the Western context, in European context. Well, actually in the Asian trade or in the China trade, the promissory notes, whether the bearer or the identified person as the endorser or as the party in it is, I don't think it's identical in the Western context, because I just did some research on the pre-modern bills and promissory notes in the Asian trade. Sometimes they functioned in a different way. So actually this is related to the third question. What's the difference between bills of exchange and promissory notes, especially in the Asian context? Actually, sometimes it's very hard to distinguish it. Let's say Hongdies. Hongdies sometimes can be used as a promissory note, and sometimes can be used as a check, and sometimes can be used as a bill of exchange. So did some ancient Chinese credit instruments like flying cash, 飞钱, and this is the most famous one, and 惠子, 交子, and some, I mean, many of them could be used in both ways. And I think in the Islamic credit culture, they have a clearer line, but not as clear as the Western context. So I mentioned this in my talk. So the standardization of the function of promissory notes and bills of exchange and checks started at the turn of the 20th century. So even continental European legal system and the Anglo-American legal system had some issues about some specific functions of these notes and bills. So what I'm trying to say is maybe too complicated just to answer them in the with the Western vocabulary and Western legal definitions. So again, I will do more research on that in the future after I finish my book on this tea trade, just specifically about how these Asian credit instruments operated in the trade with not only Americans, but also Europeans. So hopefully during that, then I can have more details for both of you to answer your questions much better. So now I just don't have enough information about that, but I will keep your questions in mind in the future as I do my research. And then maybe I can talk a little more about the difference between promissory notes and bills of exchange very briefly. So a very basic feature of promissory note is that relationship between two parties, the writer who wrote the note and the creditor. Well, for bills of exchange, it involves at least three parties: the drawee, the payee, and also like if you draw this bill on a bank, like a bank draft, that one I cannot remember the technical term. Maybe some of you can let me know the technical term. So it's at the beginning. Yeah, go ahead.
The acceptance by the bank.
Okay, yeah, maybe that one. Because I just wrote a paper actually on this, but now I cannot remember the terms. So it involved at least three parties, and we use different terms for bills of exchange and promissory notes. We write promissory notes, but we draw bills of exchange, things like that. But again, I want to say in my paper too, I just want to argue these are the Western terms. I'm not saying they are not good. They are very convenient to use. That's why the United Nations are promoting this the vocabulary and these legal systems in other parts of the world. But from a history perspective, when I think about the credit instruments in the Asian trade, I tend to think of them in that cultural context. So again, hope I will have more details about that too in the future. Okay, so about the second question, the surge of silver shipment to China. Well, this is a very good question. I think, I cannot say for sure, but I think first the surge was caused by two reasons. First is because of the interruption of the silver flow during the War of 1812. Actually started from 1807 during the Jefferson's embargo. If silver was not used to pay each transaction, people need to ship silver to China to settle their balance, their account balance. So after the war, I think many American merchants started to do this. That's why we can see a surge in the silver shipment. This may not represent the surge of trade between the two. According to what I know, the tea trade, because tea was the primary product between China and the United States during that time, the tea trade was pretty stable in the 1820s. I didn't see an upsurge, and it surged. It increased a lot after the 1830s, after the collapse, not the expiration, I should say, of the East India Company. The expiration of their monopoly in the Asian trade, and also after the U.S. government reduced the taxes, the duties on tea, so the tea trade surged in the 1830s. So in this period, it should be caused by the shipment of silver to repay their debt during that time. This should be the reason. I think. Yeah, I just forgot my second point. I think this is a major reason for that. So if it will come back to me, I will let you know. Hope this answered your question.
Thank you, Dan. So the next two questions in the queue, the first one is from Samuel Segura, and then the second one is from Del Norwood. Thank you.
Thank you so much for the very interesting paper and the very interesting, as a matter of fact. But I was a little bit struck by the fact that you're using a kind of an anachronistic law, in a way, to kind of look at something that's a slightly, a little bit earlier in the process. So, and then you start discussing a little bit the whole issue of the negotiability. Now, we financial historians tend to do something really bad, and that is that we conflate negotiability with transferability and say, and legally speaking, negotiability is composed in two ways. One is called the procedural negotiability, and the second one is the material negotiability. The negotiability was established in more or less in the 1750s under Lord Mansfield. And we're very familiar with this because everyone talks about the law merchant and blah, 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 the adoption of law merchant and so on. Now, Rogers, in 1995, in his book of the early law on the bills of exchange, questions this hypothesis, and most recently, Eva as well, in 2011, has some doubts on the whole issue. Now, the differentiation between procedural and material negotiability, I think, is important because then that helps us understand what happens in the late 19th century, early 20th century, when still the European legal system is being developed, including the Anglo-American law. And to help you a little bit with the riddle of negotiability, because it's a very complicated riddle. So, congratulations. There's in Rogers' book, there's his last chapter, there's a very interesting discussion of the evolution of the Bill of Exchange law in the 1780s, 1810s, 1820s, because there's very interesting dynamics, and there's actually a divergence between the English and the American law regarding these, and particularly has to do with acceptances. So I think it could be helpful for you. And just, I have a question regarding, you mentioned that all the negotiable or the promissory notes are only available on the American archives. But I was wondering if there's anything about the law merchant among the Chinese merchants themselves. So sorry for the long intervention.
No, thank you so much for the information. That's very useful.
Dale?
Yeah. So what a great paper. What amazing research. This is really, I mean, the prior article on the promissory notes is really awesome. And then, oh my goodness, like you're pulling such amazing stuff, and the find of the consequa note is just really, that's really extraordinary. So
thanks, Dale.
Thank you for such amazing work. I wanted to, I think you answered this in a prior question, so I'll keep it short, but I'm curious if you had encountered any kind of those Bank of the United States notes, as they were circulating, they've got that thing on that says you have to negotiate this, east of the Cape of Good Hope, which is a very American way of putting it too. Do you find them in transit? Do you find them being negotiated other places? And maybe that ties to the earlier question too, because the law says one thing, but opium traders, how much do they listen to the law and all that kind of stuff? So maybe they're doing this other way. So if you happen to encounter it, though, I suspect that you haven't from your answers to the prior ones, and certainly I haven't seen them in flux like that. My bigger question is about this. Where you sit on this causality question about the Panic of 1837, because it's I think it makes total sense, and I'm totally persuaded by your argument that this feeds into it. But I wonder where you sit or maybe you could explain a little bit where you sit on how strong you want to make that claim. And it's one that's been, Temen's book. I know Alistair, who's in the chat here somewhere, has made a similar kind of set of arguments around this as well. And kind of what strikes me about this is that the Panic of 1837 is this kind of event that the more we study it, the less we know what actually happened in a way, right? I mean, that's the import I take away from Jess Lepler's scholarship and other kinds of things like that. And her main claim is that this panic, that the emotional feeling of it, anyways, is that it's happening in this complicated system in different places, and so the causality that makes the causality that an economist like Temen really just wants to, like a lot of economic historians, he wants to be able to run regressions on data that from Pitkin and all those people that where do they get their data from? It's a house of cards that they blow away, and it's who knows, right? So I don't know how firmly we can go in that. So I guess I just want to. So I'm confused about it. I don't know how strong I want to lean on that claim. I agree with you entirely on the significance of your findings as it relates to that. But I wonder where you sat on the did the opium trade, this piece of it, this connection to the British Empire, all that kind of stuff, Chinese instability, all that kind of stuff, did that play a role in the Panic of 1837? And what does that tell us about the panic itself?
Okay, yeah. Thanks to both of you for the information, and lots of information actually, and for the question. So first,
sorry to interrupt. We have one last question from Stephen Campbell, and we're going to group them and then let you respond.
Okay, sorry, I didn't know that. Go ahead.
Well, thank you, Dr. Du. This is a wonderful presentation. I'm very interested. I plan on getting in contact with you over email. I think Dale just asked one of the questions that I was interested in about the Panic of 1837. I want to know a little bit more about that as well, but Dale already brought that up. Just a comment about the credit instruments and the bills of exchange versus promissory notes. I'm wondering if there's a couple factors at play here. Is one, bankers in the United States, but also politicians, if you look at congressional reports, they didn't seem to have a standardized way of distinguishing between these various types of credit instruments. And so, one person might refer to this as a check, another person might say a note or a draft, and it's very confusing. And I just must say from my own experience, I don't think a lot of historians and economists have done a very good job of explaining it. And I'll just throw out a question. I wonder if a bill of exchange is a more specific kind of promissory note. I'm trying to imagine a Venn diagram here. Okay. If a bill of exchange is just a smaller circle within a broader promissory note, I'm not sure. Maybe you can help with that. So thanks again.
Okay, thank you for your question, Stephen. I hope I can help with that. Let me try. So these are very complicated questions. So first, about Samuel and Dale's question. So some maybe notes among Chinese merchants, or some U.S. banknotes in China, or other trades. Again, I don't know about the information, and that's actually what I want to focus on in the future. So I found lots of very interesting topics about these credit instruments in my current research. But again, guys, it's about the tea trade. So I need to I just want to explain how American merchants purchase the tea from China. So all of these terms just came into my research, but I will look for more information about that. But Samuel, I'm not sure about whether I can find the information about Chinese merchants among themselves, because many Chinese records were lost after the Opium War, after a century of war. But I plan to go to Harvard Baker Library. They have lots of Chinese materials in their library, and also in the UK, like the Barron's Brothers archives should be very useful, and the British Library. So I will go after I finish this project. I will apply for some money to go there, look for some information about how the Chinese merchants used these among them. But I think maybe as to about that, maybe some research on like Shanxi merchants in China, they already use lots of bills. So maybe, I mean, we can find lots of information there. And as to Dale's question about the banknotes, in other trades, I didn't see much, but I know like the traded dollars, the silver dollars produced in the US in the late 19th century were used a little bit in China, although Mexican dollars were more popular. And also one more thing, Chinese started to reform their banking system in the late 19th century. Actually, their banknote was modeled upon the American banknote. So maybe that's one connection. That's the only connection that I can think of now. Well, about the panic of 1837, it's like almost every financial crisis is very hard for us to pinpoint the cause. I don't have a position here, to be honest, because again, my focus is just on tea. As long as I can explain how tea was bought and sold, I think I achieved my purpose. But I tend to agree with Temen's arguments because in the China trade, I can see the great impact of the silver stock on China. So I think his argument about its inflation, its effect in inflating the American economy is plausible. I didn't show the details in this talk, but I have the data or the information in my paper. Like after the 1837, many American merchants remanded their partners in China not to trade with the Chinese merchants because they were going to fail because of the panic of 1837. Well, many British houses were failing during that time, and they pressured on their Chinese partners to repay their bills or to repay their book balance or just to repay their debt. So the run on Chinese merchants will cause their other traders, trader partners failure. So American merchants kept remanding their partners in China not to trade with the Chinese anymore. And that's one reason that the Chinese merchants failed a lot during that time. So I can see the actual effect on China, on Chinese merchants. So that's why I want to buy Peter Temen's argument. Well, I think for all of these financial crises, it's very hard to explain it by using just one reason or two, or one aspect like political or purely financial. Everything worked together, and then a world financial crisis started. Maybe so. I think in my book, I will continue to use Peter Temen's argument. At least it's related to my topic. So that's my answer to that one. I hope it answers your question. And about Stephen's question about note, bill, and check, I think I can answer a little bit, but just based upon secondary sources. So Samuel and others in the field of financial instruments or credit instruments, if you know more, just feel free to correct me. Based upon what I know, so promissory notes may be the earliest form of credit instruments. So a promissory note is very similar to a debt contract. I mentioned this in another paper I just published this year. So if you are interested in it, it's an advertisement. You may read my that article on credit instruments on the Silk Roads. So a promissory note may come from a debt contract between two persons. Well, the bills of exchange, if I remember it correctly, it should be the document accompany it. So, a promissory note is the earliest form, and then a check in the Western context, a check developed out of bills of exchange. So that's so far, that's the information so far I know about the differences or the chronology of the three types of credit instruments. So Stephen, we may talk more a little more about that in the future if you are interested in it. I will go back to my paper to look for the accurate information.
So I have Alejandra Irigoyen as the first person of the last round of questions, and then maybe Alistair wants to give us his comment in the chat online. So let's start with Alejandra first.
Thank you, Dan. Thank you for the presentation, and it's nice to see you, Manuel. I
Likewise.
have two small questions for clarification, and then a question more concrete on the presentation. The first is, what is the money of denomination of this instrument? And how is the unit of account in the bookkeeping of the merchants? I think there are a number of references in the presentation, so I would like to know that. And the second issue for clarification is whether these instruments are issued to settle or to finance the trade. Because it's known that in this period, if we just think in bilateral terms, the balance is against the United States. So might be somebody mentioned something about the intermediation. That takes me to the point about the acceptance. Were these paper instruments received by Chinese or like the Hong, or they were just you know, part of the system with the United Kingdom? And the question for the paper is how you explain the kind of timing for the export of silver and the beginning of the use of bills or paper when these instruments were known long before that. Would you say that they are a substitute for silver, or it's just a different rule of the game that is changing the financing of this trade?
Thank you for your question. Oh, can you clarify your first question? I don't think I...
The first question is, what was the money of denomination of these bills? Well, was it sterling? Was it US dollars? Were there dollars? Was it any Chinese money of account?
Okay. The bills, right? Okay.
For the paper instruments.
Okay, got you. Thank you.
Maybe in the spirit of finishing the meeting on time, you can just take this question and then we'll forward you the conversation in the chat.
Okay. So now I can just respond.
Yes, of course.
Okay, so thanks for your question on the unit of the paper credit paper instruments. In the bills of exchange, I think the unit of the money was US dollars. We can check. Well, for the bills of exchange, most of them the unit of money was sterling or the pound, like that, and so these are used by American, Chinese, and British merchants. So most of this unit of money was dollars, and actually I think maybe also Mexican dollars, because that's like the standard or most used unit of money in the China trade. So this is the unit of money. And as to the other two questions, so first I think I've touched on the timing of the use of bills of exchange. So the bills of exchange had been in use in the China trade between Chinese actually and the UK and the British merchants for a long time, because the company started to use it. And when Americans first started their trade, they already noticed that this means of payment and remittance, but they didn't use it until largely until the 1820s, because of the bill market was forming because of the opium smuggling back to that time. So this is the timing, and also because of cotton trade also contributed to it a little bit, because during the late 1820s, the cotton trade was thriving between Chinese, British, and American merchants was thriving as well. So this gave them them another chance to sell bills of exchange. I think I mentioned this. Well, Americans didn't use this for a long time just because of the negotiability. If my understanding of this term is correct, it's just at the beginning, it was not very easy for them to negotiate or to sell their bills at the beginning. Well, this was not confined to British and American merchants. Chinese merchants also participated in it. I think this is part of your question because I showed you some Chinese merchants accepted bills of exchange from American merchants to repay their debt. That's one thing. And I think that I have here. So I have another document about how the Chinese participated in the bill trade. They also purchased the bills at a low price and sold them at a high price, especially during the tea season when the bills were in large demand. So this credit system, it was not only for American or British merchants. In other words, these credit instruments were not only techniques of capitalism or Western capitalism. Chinese merchants were involved in it, and I think Indian merchants were involved in it as well. So I really want to know a little more about how Hongdies played a role in it, because the Hongdi market was large in India and it functioned a little differently from the bills of exchange in Britain and in America. So anyway, I really want to know a little more details about how these Asian merchants manage the Western bills and their own notes and Hongdies in the international trade. So I think that these are the questions. So just let me know if I didn't cover all of the points.
Very good. So I think we have run out of time, but we really appreciate Professor Du's for the presentation of her paper. We will collate the questions and answers in the chat and send them to you. Okay. And we invite all of you to register to the next sessions of the webinar. The program is available in our website, and the website is listed in the chat for your use. And if you also if you want to join our mailing list, please be registered using the form. The link is also listed there. So on behalf of my co-conveners, we really want to say thank you all for participating today and being with us today. So thank you, Professor Du.
Thank you, and thanks to everyone for the information.